Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a series that aims to focus on the trend lines rather than just the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hi, this is Kevin Roskam from USA Financial with your trending report for the month of March 2025. Already the month of March, halfway through the month, in fact, and we are almost finishing up the first quarter of the year. And what a great time to be talking about trending and unemotional investing and a disciplined approach to your long-term portfolio. As we speak today, from its high this year, the S&P 500 is down almost 9%. And these are the times that we've been preparing for. These are the times we've been talking about over the last 6 to 8 months when we talk about uncertainty and when we talk about volatility. It's so interesting when you look back on where we were 6, 7 months ago. If you remember October, I talked about the uncertainty of the coming election. And after the election was over, we talked about the uncertainty of what would happen by the end of 2024. And in January, we talked about the uncertainty of what was to come. Well, we're in the uncertainty. And what we're seeing is volatility that we prepared for. You know, when we talk about long-term investments, when we talk about planning for retirement or financial planning, what we talk about is not knowing when the market is going to go down. And we don't talk about knowing how our investments are going to do in any given year or any given quarter. But what we talk about is planning. We plan for volatility. We plan for our accounts to grow, but we also plan for these times in the market when the market may correct and when we see volatility and when we are faced with not just the market going down, but to a certain extent, our accounts going down as well. This is what we plan for. And when you have a financial planner with experience and with the understanding that investors and advisors are emotional, that's when, if you've found an advisor that employs unemotional investment strategies that work on a disciplined schedule, then you have the ability to look at times like these, not with calm, not with no fear at all, but with an understanding that we planned for this. And so we are seeing market turmoil. And we'll see market turmoil again. We'll also see, of course, the market bounce back. If we know anything, we know that the market runs in cycles. We know that there are times when there's a lot of selling in the market and there's a lot of buying in the market. We know that the market will react to events going on politically, economically, all around the world. And so that's why it's so important that when we talk about our long-term money, we talk about the fact that there's a plan in place. Now, if you're investing with USA Financial formulas or on USA Financial Exchange, most likely you've been exposed to money managers that work on different schedules, that look at the market in different ways, and that react to the market in different ways. And so as I go to the slides to show the trends, clearly the short-term trend has changed, but has the intermediate trend changed? Is it clear that the long-term trend has changed? I don't know. And the biggest thing about having money exposed to the stock market is not that we know where the market's going to go, but it's that we know that there's a plan in place and that the money managers that we are using, that they are reacting to the market when appropriate. And so if we look at the 1 month trend of the S&P 500, we see it clearly now over the last 30 days moving in a negative direction. Again, not something we didn't plan for. We knew, maybe not this month, but we knew that at some point the market goes up and it goes down. And so, like I said earlier, what you see really from the left-hand side of this page to close of business yesterday, an almost 9% drop in the S&P 500. And depending on how you're invested for the long term, you may be exposed to all of it. You may be exposed to some of it. You may be exposed to none of it. It really depends on how you're allocated and whether you're diversified in the old-fashioned sense of owning a bunch of everything, or if you're diversified in a more practical way where money managers are able to, based on the formulas they use, avoid some of the market volatility. Regardless of how you're invested, I'm sure you've experienced a little bit of this, maybe some, maybe all. It depends. It depends on your long-term goals and your long-term plans. You've heard me say before, volatility is the cost of growth. We have to experience volatility in order to get that growth from stock market exposure. But certainly the last 30 days, we see this trend. And based on this trend, some of the money managers we use have gotten defensive. If you're not sure where your accounts are and you're concerned about it, it's a great time to touch base with your advisor. Just review, how am I invested? Because investing in the long-term stock market doesn't mean you're going to avoid loss. The plan is to avoid catastrophic loss. And if you need that reminder, by all means, make that call. If we pull out the trend of the last year, we can see the volatility. We saw the volatility 9 months ago, and the market recovered. And we see the volatility now. And if you see this chart and it makes you nervous, the first thing you need to do is ask yourself, is this long-term money? Is the money I have invested in the stock market something I need tomorrow? Or is it something I need next year or the year after or the year after that? Because what you should have, depending on your age, is any money exposed to the stock market, you should have time built in to allow it to recover. But we can certainly see in this 1 year chart the volatility. And so let's go back out to the 5 year. And again, what we still see is that even though we're experiencing some volatility and a downturn in the market right now, if we've been exposed to the stock market over the last 5 years, we're still better off than we were 5 years ago. The market still moves in an upward trend, even though there are times where it corrects and there are times where there is volatility. And so as you think about where the market is right now, as you consider what's going on in the world, I just want to remind you that this is something that you and your advisor should have planned for. Again, not the specifics, but the reaction to what's going on in the stock market. Maybe you've heard me say before, short-term emotions kill long-term plans. It's an emotional time right now. But if the long-term plan was good when it was set up, now should not be the time to abandon it because of a short-term market move. And so, as we sit here in the middle of March, with the stock market down almost 9% from its peak this year, it's important to remember What money do I have exposed to the market? When do I need that money? And what is the plan in place for that money to react to what's going on in the marketplace? I'm happy to report that many of the strategies that our clients use on our USA Financial Exchange platform have already gone defensive. They've already reacted to the stock market move, not based on a hunch or a feeling, but based on the formulas that the different money managers use to get defensive when those formulas tell us to. It's a disciplined approach. It's an unemotional approach. It's an approach that allows you to get exposed to the market knowing that there's the opportunity to play defense when it seems to be appropriate. And so for this monthly trending report, the immediate trend is negative. And I think it's important either to know that the short term is what we have to get through to get to long-term growth, and to be able to kind of take a deep breath and say, you know what? I know there's a plan in place and I trust my advisor, or I trust my advisor, but I need to review the plan. Remember, communication is key. If you can communicate, if you can get a refresher on how your money is supposed to react in market conditions like this, you can control your emotions, and we can mark the trends and stay invested regardless of how those trends are currently moving. This is Kevin Roskam with USA Financial. This has been your March monthly trending report. Thanks for your time, and we'll see you next month.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.